Hey there, everybody. Welcome to March the 4th, and it's a beautiful Carolina blue sky out there today. I hope you get outside and enjoy it if you're in the Charlotte region. And I know that Jack is getting some water right now, and from what I've been forewarned, Adam has a tirade, so buckle up. So Adam, hey, I'll let you go ahead and do this. Just as a reminder to anybody jumping on here, hit us up on the Q&A. We will do our best to answer those in as intelligent of a fashion as possible. And if you want to harass us, you hit us up on the chat. We always enjoy that too. So Adam, you're teed up and ready to go.
Yeah, well, it's still a continued tirade in the state of North Carolina, not taking any activity that's discernible with respect to whether or not we're going to pay taxes on expenses that we deducted with PPP money. So we're now down to, one of 19 states remaining that hasn't passed legislation. And remember that some of those 19 states that haven't passed legislation yet have active, public legislation moving through the channels. People who have already taken action include our brothers to the south, South Carolina, our brothers even further south in Georgia. Florida doesn't have income tax, so I guess it doesn't really matter there. So it just, it's frustrating, the level. So again, it's just an encouragement that people start blowing up your state legislatures and House representatives. It's just frustrating that, every teacher that I know is currently getting vaccinated. Schools are getting back open. That it's just inevitable. They're opening back up. Yet the General Assembly thought that it's a good use of time to try to pass legislation to force something that's happening anyway, get together, talk about a veto override just to make sure that something happens. It's going to happen anyway. But I guess in their minds, maybe 2 weeks sooner than it was going to happen naturally. Same deal with, forcing restaurants to open. It's like, yes, I'm all for that too. It's going to, but, and maybe that could have helped that it was going to happen naturally. But to be so focused on that and just, by the way, we're still going to tax you. That's just freaking crazy to me. Crazy. The level of to say that you're pro-business and wanting to help people out, yet you've taken no action on this matter is just ridiculous. I mean, it's absolutely ridiculous. It's like I wish there was a possibility to completely just throw everybody out and start completely over. Anyway, on a good front, the SBA did just release rules related to Schedule C filers, which are ideally targeted to small businesses, sole proprietorships. It did look like it was a pretty positive outcome, but there's also some kind of caveat emptor type stuff in here where if you're a pretty small business, instead of having to use your bottom line net income, which a lot of sole proprietorships, the bottom line net income isn't really indicative of what they're really taking home to support themselves, especially if they're a home-based business. So they allowed Schedule C businesses, this just came out, I believe, yesterday. They're allowing Schedule C businesses to use gross income for the purpose of, meaning your sales. Gross income is another word for sales, as a way of determining your loan eligibility, which is great. Like at first glance, you're like, hallelujah, because for a lot of small businesses, that's going to mean, a bigger shot in the arm in terms of funding. So that's generally positive. The caveat emptor piece, which is remember I try to play a lawyer on TV, so that's my fake Latin that Jack will probably correct me on at some point here, is that, they also said, look, we also recognize that this could also lead to a lot of fraud. So if your loan amount's more than 150 grand, they didn't say it exactly this way, but they said and you use gross receipts, sales, there's a chance we're going to go looking. So, you know, so just, don't, obviously, I don't think we have a lot of fraudsters um, on this call, but it really was meant. This is not one of those cases where I would say, go for the max if you can and then roll the dice. It really is, look, this was targeted at small businesses. There's a reason they set the cutoff at $150,000, so just do the right thing if you're north of that. Because if you are going to get scrutinized and have to stand up before the judge potentially on this one, if that's the case. And presumably, I think their argument is that if you were more than $150,000 in sales as a sole proprietorship and you had employees, you really should be using the employees and your bottom line as your calculation, as was originally the case, or alternatively, you're kind of at the max wage calculation anyway of 100 grand. So I thought it was a good ruling, or a good guidance on their part to really free it up to get people to the 100 grand point pretty quickly if you're a Schedule C without a whole lot of muckety muck. But I think what they're saying is that if you're larger than that, beware and don't take advantage of this. So.
All right.
I'm up, right?
All right, go ahead and take it. And everybody, he is wearing his Charlotte Christian tracksuit because they have a track meet today.
Yes, again, trying to get in the right mindset and prepare my voice for the yelling, deciding how many layers I need after 6 o'clock tonight, because we are in Charlotte and it gets really cold at night, really warm during the day. So, interestingly, if we were having this conversation yesterday at this time, it'd be nothing really to report. But as of yesterday afternoonish, a couple things happened, and I'm sure that some of you, if not all of you, know generally about it. So the SBA did two things. They published the new application for independent contractors, sole proprietors, and they essentially small businesses. And then they also provided some guidance. It's like maybe, let's see, I have it up here on my screen. It is 32 pages. Now it has the front end and the back end, but basically it's, we're going to tell you what essentially it says. And so what they did was, and what we talked about previously was that, okay, there's this 2-week window that starts, but we don't know what the rules are. And so how can we do anything? So pretty much paralysis in being able to do anything, because really what they did was they changed the calculation from it being essentially net revenue or payroll costs, some component of those two, and now we're saying that it's gross revenue, essentially gross income. And so generally speaking, those business owners that file for their business taxes and show the performance, et cetera, using Schedule C on their 1040s, those are really the ones that they're looking at. And so the form, you need to take a look at it and just walk through it. It has minimal instructions, but you'll see that it walks you through, asks for the NAICS code. It says, do you have employees? If you have employees, do this. If you don't have employees, do this. And it really tries to walk you through the process and make sure you're not tripping over certain trip wires, like, for example, number of employees and those kind of things. So it's kind of like a choose your adventure type form that you go through and fill out, and you should be fine. And I'm, a little bit, I'm not as familiar because this just came out yesterday, so I'm kind of going through this and a little bit, but it asks you the same questions. It has the demographic information that's optional and goes through some of the instructions and has check the blanks and those kind of things. So similar to the other forms, but really targeted to those business owners, the sole proprietors. The interim rule basically just implements and says, this is what income is defined as for the purposes of this form, and goes through and tries to match things up. It's not complete. There's still room for interpretation for certain things, of course, but at least it's out there. And, you know, if you qualify, if you fall under this, then you use that form. So that's essentially the summary. I mean, it's big, but it's not extensive. It's kind of what we expected. You fill out the form and you should be good to go.
So if you guys are ready for questions, Robert, I knew I could count on you. I got 3 of them from Robert. But before we
Lordy.
but before we go to Robert, Chris had a question that probably tied more, you know, back to both of you guys, but he and this is the question. I heard about this as well. Is it for PPP 1 and or 2?
I don't know the answer to that question, but I would assume that it was for PP. Well, I don't know the answer to that question, but my assumption is PPP 2.
Yeah, I was looking to see if I could see what, you know, what the scope of it is, but I think that it is just for 2 because, as we've talked about before, trying to keep it separate, you know, finish out 1, even with the reapplications, and number 2 is for, you know, under the newer rules. So, you know, everything that applies to PPP2 would apply to this. They're trying not to mix and match. And that's based on my just quick scan of that 30-page document from yesterday.
Yeah, I got the sense just from reading the literature, like I get the theory behind, hey, if you got shortchanged in PPP 1 based on subsequent guidance or your bank screwed it up, you know, go back and get some more money in PPP 1, or if you never got PPP 1 in the first place, go back and get it. It's just with this specific one, it was just so targeted to the 2-week window of we're prioritizing the little guys, and we recognize we didn't give the little guys as much money as they really needed in the first round based on the way that we impose the rules. So here's the new rules. I don't know. They weren't specific, but I'd have a hard time believing this would be used as a go get more money from round 1.
All right, cool. Oh, let's see. Oh, is that from Hayden? Hold on here. If Schedule C PPP borrower already requested PPP 2 draw, can they go back and reapply for the second draw based on the gross income limits to the higher amount?
Yeah, I do think that the whole intent here was if you were shortchanged in round 2, then go back. I mean, it's not, again, it wasn't specific, but that to me feels like that would be right.
All right, cool. All right, I'm going to go back to you, Robert. First question from Robert is, the new SBA application for independent contractors, 2483C, which is what we've been talking about, has a gross income calculation option. Explain why EIDL is part of the calculation and how that impacts it.
So I think that, and this is a Jack theory, but I think it's accurate, is that the reason is that, and because they haven't published all of this yet, but my understanding is that you can refinance your EIDL loan, not the grant forgiven part, but the part that is actually the loan part into this. And so there has to be a mechanism to be able to do that and address those in the form. So I think there'll be more to come about that, because I did see that in the form. And I think in the instructions, it also mentions that, but it doesn't provide guidance other than to say that it is for that non-forgiven, the non-grant part of it, to bring it back into the formula for the overall essentially borrowing base of the new loan, essentially. So refinancing something that wasn't capable of being forgiven because it's EIDL into the forgivable program. So that's, I think, the conduit to make that happen.
All right, I'm going to move to another one, and I'll come back to Robert on his second question, but this is from Kim. Hi, I've got a question for today's Zoom. This is my first Zoom call with your firm, so forgive me if this has been asked for before. Welcome, Kim. I received my first PPP funding the first week of May 2020 through Chase, which also holds my business account. They've not yet allowed a request for forgiveness, and I'm afraid I'm running up against the deadline of 10 months. I've since received another PPP loan in February of this year. Once they start accepting forms, can I file for forgiveness of both loans at the same time using separate forms, of course?
I mean, I can't imagine that any bank is going to allow the 10-month clock to expire, which, you know, if you've got a calendar in front of you, would be, since Jack has calendar in front of him. I'm stalling, Jack. This is for
First
you,
week
buddy.
of May 2020 is when you got it.
Please don't make me do math.
Your time to shine, Jack. Now, I mean, most people, like, the earliest anybody would have gotten funded would have been kind of that last week in April timeframe. So then if you roll forward the clock 8 weeks, that's when you spent the money in your earliest possible period. So that would be, you know, call it
End of June.
May, June. So July 1st is really your starting point for the 10 months. So with that in mind, it really is kind of that May timeframe, as Gary just said, without us really thinking about it, is the end of your 10 months. No bank wants to hold these loans. So I truly believe that the inability to submit for forgiveness right now is simply just a temporary thing. Especially if you're in that 150 and below automatic kind of range. I mean, that'd be crazy that, you know, no bank is going to want that loan. So I don't think it's going to be a big deal, but I think there is going to be a mad dash, call it the April, early May timeframe, to get these loans off the books and push for forgiveness. So plan on the rush job occurring then, which kind of gets to the second question, which is, you know, can I just apply for forgiveness, you know, both at the same time? It really would depend on when the 10-month expires for the first one versus when your 8 weeks expires in the second one. But, you know, in theory, you could do them back to back if that's just the way that the cookie crumbled, so to say.
Okay, put your thinking caps.
What movie was that from, Jack?
Oh,
All right, let me think about that. I won't cheat and Google it, but I'll think about it.
Okay.
you are kind of like a, well, at least a 80s hairband, you know, Cliff Clavin, but I don't know. We'll see about the movie thing. Next question is from Robert. Has the FMLA COVID credit expired on 2/28 or was it extended?
I thought it went through 3/31, but don't quote me on that.
All right.
I didn't stall long enough for Jack to look it up, but maybe
well,
he's got the computer in front of him if you could look it up, but I'm pretty sure that baby went through 3/31 or 3/15. I can't remember it expiring at 2/28.
While Jack is doing his expert Google searching, here's the next question for you, Adam. There's an expansion of PPP in the 1.9 trillion bill in Congress. What are the details of that expansion? Oh my gosh.
Well, I mean, it's really not much. I mean, it's much to do about nothing. I mean, the only, you know, there was kind of a lot of ballyhoo about this bill's about anything but coronavirus pandemic relief. And it's like, simply taking the checks to $1,400, even with the ratcheted down amount, that alone, I believe, is more than half of the 1.9 trillion. So you layer in a tax credit for children, and you're pretty much at 75% of the 1.9 trillion. So direct checks, tax credit, that's the vast super majority of the stimulus package. So all that said, when it comes to small business relief, look, there's not a whole lot here in this bill. And I don't expect there to be a lot of changes to it either. But, you know, the PPP money is a supplement. It's supposed to be targeted towards small and minority and distressed businesses. So it's super nichey in where they're trying to target. And then the second one is, I believe there's 22 billion for restaurants, but within restaurants, it's pretty small. Like, I mean, I can't even think of that many of our clients, like a food truck would qualify. I think it was like 500 grand in sales was the income limitation, if I'm not mistaken. Jack, that would be your second thing to Google real quick. But the income limitation for the restaurant relief was pretty small, which to me means that's great they put it in there. But at the same time, we don't have a lot of restaurant clients that are below $500,000 in gross sales. So hopefully that gets modified at some point in the future. But all in, I mean, it was of 1.9 trillion, round numbers, maybe 50 million of it was targeted in the more traditional relief that we've been talking about on these calls. The rest of it is, the vast super majority of it is direct checks going in your pocket based on your income limitations and how many kids you have. Still doesn't pay for the kids. And then, secondly, helping local governments with virus relief and stuff like that. I mean, there's some shuttered venue, shuttered operations type stuff that's in there, which is when you hear this ballyhoo about museums and stuff like that. Like, I don't know the specifics, but I'm assuming that's what they're talking about there. So,
plus the special interest pork bellies in there.
yeah.
So it wouldn't be Congress if they weren't jamming that stuff in there. So did we stall long enough for you, Jack, or what? Like, you're still on mute. Oh, there you go.
Sort of. And so here's the thing is that I am hesitating because there's interaction between the FFCRA and FMLA that interacts. And so, one is obviously expanded to the 31st, to March 31st, but I don't know how it implements.
Yeah, that's it. That's what I thought. It's not the 28th, it's the 31st. That's fine. You're right that it goes through the end of March, not through the end of February, I believe.
Yeah.
All right.
Because the whole point in offering it on a voluntary basis was to extend the time frame that you can get the FFCRA credit, which is probably a double statement of the word credit. But
all right, couple sole prop questions. First of all, David, I knew we could count on you to be here too. And there's some comic relief in this one too. So, okay. So the SBA published the new sole prop form yesterday, but now we're supposed to wait for the banks to implement this new process, ? Since some banks, Bank of America, are saying you have to apply by March 9 and Biden's window ends March 10, there hardly seems time available. How's that going to work?
So my prediction is that that there is a problem. They jumped the gun. They started this 2-week process, exclusion hold for many people. And then the people who were able to apply didn't know what to do, how to do with it. And while banks do have some guidance based on that, the disclosure that was sent to them, that 32-page document, it isn't crystal clear. And I think bankers just naturally are going to take a conservative approach and a CYA approach and say, all right, wait a minute. If it's not completely clear that I'm completely covered, and they might accept the applications, but they may not process them. So I think that because there's been more than several days delay in getting this stuff that we got yesterday, that I think that it's going to the 2-week, again, Jack theory, the 2 weeks has to be expanded to actually give us the intent, the benefit of the intent, which is to have 14 days, not 7 or 8 days, and then have the bank say, wait a minute, hold up, we're not ready. But I think that if it doesn't change, then yeah, you gotta hustle. You only have a few days to get it into the banks. I think that the theory would be that you knew this was coming, and so you should have already had your stuff together. Now you just know which box to fill in for this stuff. So again, I'm not defending that. I'm just saying that that's the theory that I'm hearing out there, is that, why did you really need the 14 days if you already kind of sort of knew the formulas, and it's just a matter of how you're going to express that. Now, I know that we're talking about a different number. We're talking about gross number versus net income or payroll. So again, in theory, that's an easier number. That's, you pull that off your financials, right? So again, not defending, but I would see in a possibility that they may say we're not going to extend it. But I think logically, in all fairness, to be equitable, that it should be extended.
Yeah, I mean, especially because the extension was done legislatively, or not legislatively, from the executive branch, as an implementation. That's that stroke of the pen. They can change that. Here's another movie reference for you that goes along with this. Major. I can't fly today because I'm crazy. Only a sane person would say they can't fly. Yassarian.
Are we giving away stuff for people? I'll do that.
Yeah, we're gift cards.
$10 gift card. Who first says what movie that's from?
Yeah.
Okay, while we're waiting for that one, here's a caveat that came in from David. All restaurants are eligible. The 500K limit was a special set aside for folks less than that, but the original plan called for up to 5 million to any restaurant of 500 employees or less, up to 10 million per company. Catch 22 question mark.
That is correct.
It does feel that way.
I don't. Can previous winners win? Or are you excluded?
Yeah.
I guess since I didn't say that, then I gotta.
Oh yeah, I love it that it's your money too.
He's never won before. Okay.
Okay, fine.
That's funny. One of the last winners doesn't drink anything with caffeine, so he had to give away his gift card. But he was appreciative. For the new sole prop rules, is the new loan amount 2.5 times the average monthly revenue?
Yeah, except for up to the limit. I believe so, but because I mean it just came out yesterday, so it's like we've gotten the breakdowns as everybody else. But you just sub in one number for another number, and it sells instead of the bottom line number. And it said that will yield a larger number. Therefore, be careful, because they also said if the loan amount is above $150,000, you're not in the $150 to $2 million. Hey, everything's cool with us. Just submit your application. You're fine category. You're in the we're gonna look at your ass category, because it's going to yield a bigger number. And Schedule C's have been a high target. Everybody that's a BGW client that files a Schedule C for more than $25,000 can recite this line. That's the magical point where we usually have you elect that status, so you can create a separate term, because that puts you in a different audit lottery group, and the break even is different. So just Schedule C's have been the breeding ground for tax fraud. So if you think about it, that's where the doctor that has the horse farm that really is his subsidy for paying for his daughter's pony, deducts the horses to offset his heart surgeon income. That was very probably sexist somewhere there, but it's where people usually, this isn't a knock on people that are straight up doing it the right way, but it's the place where a lot of people put their hobby type stuff and try to make a go at a legitimate business. And if you suddenly start using gross sales for that, it's like all of a sudden that hobby farm may create an $80,000 loss each year, but damn it has $10,000 in sales. Now that guy's got 25 grand, makes $1 million a year as a surgeon. I'm not saying that we did that. I'm saying that's what the IRS is concerned about now with this new ruling.
Yeah, and specifically for the question also, when you go through the form, it's specific. It says if you do not have any employees, if you have employees, take your gross income, or take your, it even tells you line 7, minus the sum of line 14, line 19, and line 26. Put this number here, divide by 12. It's more than $8,300, put $8,300. And so it really walks you through it. And so, you know, I have not done that to see if it actually works. So if you find that it doesn't, let us know, because, you know, best intentions, but maybe, hopefully it works.
All right, next question is, I know you've probably covered this over and over, but could you please recap the qualifications for the second round of PPP? I did receive first round.
You had, you know, it's multiple tiers, but the first tier is you had any quarter in 2020 that was less than a quarter in 2019 of 25% or more. You know, the next tier would be comparing the full year to a full year if you don't have quarterly records, because presumably if the full year was down, then, you know, a quarter somewhere in there is going to be down. And then the third round is if you weren't in business in 2019, you can compare against the first quarter of 2020, which still leaves people in a lurch. You know, that if you just opened in 2020, didn't have any sales, you're still in a lurch. I mean, there's not, that's like this missing group of people that there hasn't been help for them with PPP program thus far. But those are your three basic tests: is any quarter down 25% relative to 2019. You're not going to do the quarter comparison, you can do a year comparison. And if you weren't open in 2019, you can use quarter one of 2020 relative to quarter four of 2020.
Yeah, and I would suggest that you go to the SBA.gov website and go into their your PPP program subpages, and it sets first draw, second draw, loan forgiveness, lender information, data. And so it really, and then when you go into there, it walks you through all of those things, so that, because it is confusing. And so, so I would suggest go through those and just kind of, yeah, got it, did it, and you're good. But we've always said that documentation is the key to all of it.
And I think with anything, I mean, it is this mic open?
Yeah.
You know, your financials, you're supposed to, you know, do the comparison based on your comparison of internal financial, how you would normally run your internal financials, and report them. So that being said, you know, if I was close, you know, there's a term in our test department that's called cutoff testing. You know, and that's basically looking at a date period and saying, all right, right around that date period, is there stuff that either should be pulled back or moved forward, you know, based on when it occurred? And to give you a good example, it's like, you know, you're in quarters, right? So if you think about, well, you know, I really was kind of having a crappy, you know, second quarter, and I'm off by, you know, and I'm 22% down, not 25% down. You know, and then you start looking at, well, what were the invoices that I raised at the tail end of June? Well, hold on a minute. I mean, that's an invoice that we normally would raise in July, you know, but it's because Sally was going, or Timmy was going out on vacation and wanted to get their work caught up, you know, before they left, because I said, make sure your work caught up before you go on vacation. You know, I really would look, you know, I would have no problem if I was close looking at the cutoff dates and moving things around to meet how I ordinarily did business. There's been no rule that says you can't do that, but, you know, so again, that's one that I would feel pretty darn good about standing before the judge in front of. It's like, you know, look, I was 22. It's not like there's an audit trail on this, but I was 22% off. You know, it looks like we raised a batch of invoices earlier than we should have. We moved into the subsequent date. You know, the dates we got paid were all the same dates you would expected, you know, blah, 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 blah. You know, I'd have no problem with that. I mean, if you think about it, it's like, you know, whether if your customer always pays you on the 30th, whether you raise the invoice on the, 10 days early, 5 days early, on the day that you're supposed to, they've got you set up for an auto payment. You're going to get it when you get it, whether you raised it early or not. So I just would look at your cutoff testing. And that's especially true if your revenue is an estimate anyway, so that would apply to construction and apply to some manufacturing that does percentage completion on manufacturing. If your revenue recognition policy is an estimate, I would look hard at that.
All right, we're down to the last question, and it's not a question. It's actually a good job, Adam. So if you have any questions, hit us up on the Q&A. But this one says, FYI, this is last week's banter. Adam's response to the jet boat question. The question was jet boat versus prop. Sealed the deal on us on buying one. Safety is all my wife needed to hear.
Sorry, you won't be able to wake surf.
Yeah, don't invite me anyway. One torn bicep is enough. Okay, next question. Do sole props have to, and this is not props on boats. Okay, sole proprietorships have to show the 25% revenue decline.
Yeah, I mean, it's the same. It's the same rules. They didn't say anything contrary to that.
Do you have any good ways to do that for folks who don't keep good accounting records?
Well, you're stuffed. I mean, that's why they allow you to do the annualized comparison. Meaning, like, you just compare all of 2020 to all of 2019 in that case. That's why they allowed for the annual comparison.
All right, good. Any other questions out there? Let's see if I've got anything else that's come in via email. Nope, we've gotten Kim's question answered. So
while you guys were talking, I was looking for this because I know I saw it and then I found it. There is also a web page on the on irs.gov, and it's in their newsroom, but you can probably find it by doing COVID-19 related tax credits, and it's under coronavirus tax relief, and it goes through. I mean, and it says it's updated since updated January 28th, but because it's on there and it hasn't been changed, it's kind of like the rules of the road, really, for a lot of stuff that we haven't really been focusing on, like the PPP. We've talked about tax credits, but it talks about, and it gives you an overview, talks about paid sick leave, family leave, and other stuff in there. So I would suggest take a look at that. I mean, I would just overall suggest just kicking the tires a little bit in the IRS and the SBA website just to find information, because there's a lot of stuff out there. There is also, let's see, looks like a PDF, and I think it's not pulling it up. Yeah, okay. It's an FAQ that even goes into further detail. When can employers start claiming credits? Eligibility, again, qualified sick leave, health plan expenses. I mean, all the minutia that we're not really seeing through the SBA, this is actually out there on the IRS's website instead. So
again, can you do a copy and paste into the chat?
Yep.
So anybody that wants to see
the only thing, when you look at that, it is a really useful site because it is the latest, greatest in the IRS. But what they haven't done is they haven't deleted old guidance. So what I've found is that, if they issued an FAQ early and then it was superseded by something else, they didn't delete the early one. So just, and the SBA has done the same thing where they haven't deleted old guidance either. So it just, know that if you Google it, you hit the first FAQ, like, holy crap, that's totally contradictory to what I've heard. Right. Keep reading.
Yeah, and relatedly, if you are looking at information on whether it's a law firm webpage, CPA webpage, wherever it is in the news, make sure you are looking at, because the IRS, SBA does a better job of updating their stuff, but a lot of times when like for example, when we publish stuff, we don't necessarily update it. So it is dated, it's static. So yeah, to further Adam's recommendation, please make sure you have the most updated information when you're looking at it. And usually they'll have the date posted up at the top,
Right.
next to the author, and then it might say updated as of 3/3/21 or something like that.
Next question, and it has to do with that. Any good tools for doing ERC calculations, which that has something, but also is BGW accepting clients who need ERC help?
Yeah, I mean, so what we haven't really done is we haven't said, hey, let's take on somebody that only needs ERC help that's not also a firm client. But if you want to shoot an email to Gary, we can talk about your specific circumstance. But in terms of the calculation, it's you've really got two buckets. Bucket number one is going backwards. Bucket number two is going forwards. Most people in our client base are qualifying for the bucket number two, which is to go forwards. There is one exception I'll talk about here in a second, but so that when you're just reporting to your payroll company, the wages that qualify, and that's just a credit that's a credit amount times employee. It's pretty straightforward. Even going backwards, it's still that straightforward. The only difference is you got to factor in how much did you receive in PPP funding relative to the same time that you're claiming the credit. So all that said, one thing that did come up, I guess, this last week that I haven't mentioned before is that with the employee retention tax credit going backwards, we've said over and over again, hey, the rule is you got to be 50% down, and that's to claim the credit. That is true, but there is one other test. The other test is the government forced you to shut down. If you're in the government forced you to shut down, so restaurant, this would be something that a restaurant would qualify for. If you're in the government forced you to shut down, then there's no follow-up that says you also have to be 50% down to qualify. It's just the government forced you to shut down. They don't give any guidance on when you can stop claiming the credit if you're in that scenario, but my assumption is that it's when the shutdown is lifted, or alternatively when you're at the 20%, back to 80% restored revenue, just like the rest of the credit is. So just note that's out there, because there are some extremely limited cases where you were, and the IRS is super clear on like, what does an order mean? It's like literally, you have to shut down. Not, well, Jack can't get any work done because he services mostly restaurants. Restaurants were shut down and then went to 50% capacity, so therefore they're not paying Jack, and therefore Jack's business down. That doesn't qualify. It literally has to be the result of a direct order, which is, there are some, there are people out there that are gonna qualify in that category.
So this actually applies directly to that, and it says in California, restaurants were limited to 25% occupancy. I can't decide if that was a partial suspension. Do you think it is?
Yeah, hell yeah. I mean, if you think about it, if there were no pandemic and you said, Adam, I'm thinking about starting a restaurant, how do I guesstimate what my revenues were? My answer would be, what's your square footage? How many tables will you have? And how many times will you turn them? Thus, if you reduce that number by 75%, clearly that's going to have an impact. That a lot of people augmented with some takeout, but you get the point.
Yeah. Let's see here. First draw loans received in 2020. Can the borrower choose the covered period beginning on loan dispersal date and at least 8 weeks from there? In other words, we aren't forced to use the 24-week period, correct?
No, the default, remember, was 8 weeks, and you could opt into the 24 weeks unless it was received after a certain date. I don't remember when it was, but it was something like June 15th or June 20th. You remember, Jack? somewhere in there.
I was
If you
just
received a
thinking
loan
that.
after that,
Remember the date.
yeah.
I can
If you
find
received a loan after that, by default, you were 24 weeks, but any loan prior to that, it was at the election of the borrower and the lender.
All right. Other retailers were limited to partial occupancy, and the IRS said explicitly that it was not a partial suspension.
Yeah, I mean, I can't remember all the specific criteria, but on that same FAQ link, I think that Jack sent, somewhere in that area is the definition of what a suspension actually means.
All right. Next question is, if a sole proprietor with no employees had a Schedule C line 31 loss for 2019, they did not qualify for PPP round one, but they have revenue and should qualify for the new gross income line 7 option for PPP 2. The new form for independent contractors does not ask for PPP loan number, but will that become an issue?
It's a good question, and the only thing that I could tell you is just try and see what happens.
Yeah, I would think that, you know, from one perspective, the government has come back and said, yeah, they've admitted to kind of screwing it up or not getting money to some of the intended people with round one, but they're not saying, and we're going to go fix round one. It's kind of like round two. Hey, we hope we got it right this time, and so we're changing up the formula to be more inclusive, essentially. So I don't know if they're going to revert back, because it's somewhat of a penalty potentially. So I haven't seen anything about it, but I think in line with what we see as it being, kind of essentially 3 buckets: round one, part 2 of round one, and then round 2.
All right, this is from Kim. Quick question: is the government giving us a break for 2020 on the top 35, says years of income when calculating Social Security?
I've not heard anything about any revisions to any Social Security calculations in terms of having this be an impact to that calculation. Not. I mean, and frankly, I wouldn't count on it.
All right, here's the next scenario. Company received over $150,000 in PPP loans in 2020. Forgiveness has not been granted yet. They wanted to know how to report that on their financials in 2020 and 2021, assuming that they get full forgiveness in 2021.
Yeah, I mean, whether you do it in 2020 or you do it in 2020. Well, sorry, in North Carolina, it's pretty explicit. It's 2020. It's when you spent the money. So, effectively, you're picking up other income, and that's offsetting the debt associated with what you expect to be forgiven. So I don't see a reason why anybody would put it in 2021 then if you weren't in North Carolina. And that's consistent with what the IRS regulations were prior to not allowing, when they were still saying you couldn't deduct the expenses. It was basically, when you spent the money, you need to report it as the income, assuming that you have a reasonable basis to believe that you'll be forgiven. So if you were in the below $2 million category, you have a reasonable basis because they pretty much said you are forgiven. So I would do it in 2020.
All right, and this is David is chiming in on Robert's deal. If your client did not already get a PPP loan number 1, make sure they apply for first draw loan. I've seen people apply for PPP 2 get rejected because they did not get a number 1. they simply used the wrong portal to apply. So be careful to make sure the bank knows that they are a first draw client. All right, thanks for weighing in on that. Any other questions from the gallery? You guys have been a lively bunch today, man. We've answered 16 or 17 questions already.
So that I don't steal your thunder, but I heard that the Utes at the AICPA are creating some noise, and I don't know if you want to, since it's your guys' industry, I don't know if you want to share it or not. About
No, fired up, man. You're talking about noise that I don't even know what the hell you're talking about, Jack.
Oh, yes, you do.
Fired up.
Yeah.
Well, it's
basically it's about extending the deadline.
Oh yeah, that's right. Okay. Yeah, that was a much ado about nothing.
Yeah, essentially.
They're banging the pots and pans and trying to get our legislature to do something about that, because we are in one of the 19 states of shame that is, I think, trying to balance budgets by, using this additional tax revenue. Wasn't it 800 million that's at stake?
Something like that. I think what Jack was talking about, that was extending the tax deadline. Which,
the deadline. Yeah.
Which presumably would allow you, if you allow for a payment of the extension payment. I have a hard time, even I've got a problem with, it's not that I have a problem with it, it's that I have a problem with the logic behind it, because it's like, but you made me pay the September 15th estimate and you made me pay the January. It's like, now you're telling me I can't make the April 15th number? It's like, as cool as I think that would be, it's hard for me to believe in the logic behind it.
Yeah, and actually, it is, I shouldn't say in good company and bad company, but going back to the deductibility, I was looking at, actually, you guys sent me a link and it had a chart in it. And the two categories, excluding from taxable income, allows expense deduction. There are other states that, we want to have check marks in both of those boxes, and we're not there yet, but there are other states, I think at the time it was 19, but maybe less than that have seen the light, have been enlightened that, yeah, they should do both because it was the intention. But yeah, it's hopefully they'll get it right in Raleigh, hopefully soon, but they also need to refill those treasury coffers. So again, not excusing it, but it's just the reality of politics.
All right. Robert gives a couple clarifications here. He's like, hey, thanks, David. My client did not qualify for PPP 1, so using Form C does not have you identify first draw or second draw, Form 2483-C. So, well, if they made it easy, I guess we wouldn't keep doing this. He said, now that there are 3 forms, 2483 revised for first draw, 2483 SD for second draw. I guess that's not for South Dakota. All right, second draw. And 2483C is for independent contractors. Hey, we used to say at Bank of America, why use one word when 3 will do? So why call it a branch when it's a banking center? That was 2. So
as I said before, on that SBA webpage, I just looked to make sure that they did add a link to that Schedule C. They put it on there yesterday. And then they have an updated form for, let's see. Interesting. I wouldn't have thought they updated that, but yeah, it says second draw borrow application form. So interestingly, and I'm glad I found this, is that the main form has been updated as well. I don't know exactly. I'd have to go through it and see to the old form. So if you haven't filed your application as of yesterday, then you need to use this actual, pull the form off of the website now and use that form instead. Like I said, I don't know what these actual changes are, but because it was republished yesterday, I would suggest you use that, only because you don't want to create bottlenecks into, just again, logistical bottlenecks. Just use what they give to you and hopefully it works.
Can you throw that link in the chat for everybody too?
Yes.
That'd be awesome. So we've helped people determine to buy jet boats instead of prop boats. We know that we're making an impact here. So that's good. You guys have been great with all your questions. Any other questions before we sign off? Been a good discussion. Thank you for doing that, Jack. Look in the chat, everybody, for that form.
All right, and since I did purposely use a word about 5 minutes ago, and I'm gonna give a card away. I already got to send one to David, but so the word that I used from a movie in the 1980s, I think it was in the 80s, must have been, Italian-ish based character, legal related. So if you still didn't get it, then I guess I'll have to try again next week, but that's okay. You have to be paying attention.
Is it a 3-letter word?
In some cases, actually, well, it might be a 4-letter word.
If it's a Z or an S.
In some areas of the country, it might be a 4-letter word.
Yeah. Man, nobody's jumping on that thing.
That's okay. See, they're gonna pay attention, or I shouldn't say this. They're probably gonna go back and watch the recording before next week, and then they'll be ready.
Well, yeah,
that's cheating.
It is cheating, but we haven't scoped it out and said that it can't be too obscure. Oh, come on.
That's okay.
Just watch the entire thing. He's used this word twice, once today, once last week. So there you go. All right.
Now here comes the guessing. It's like, oh, well, why not? Throw something out there and see if it works.
What I'd like to say, Jack, is that my biological clock was ticking like this.
That's not fair.
That's the next hint.
That is that's a huge clue, actually.
So yeah.
Also, if you know my daughter's name, that would also be a clue. Big clue.
Oh.
Not that she was named after that actress, but I don't know, maybe subconsciously that's how the name kind of came up 18 years ago, 17
But
years
it wasn't Scarface.
It was not Scarface.
Sorry, Robert. Oh my goodness. All right. Here's the deal. We've lost not quite half of our audience, but
Oh, wait a minute. I see. Cindy got it.
Cindy!
Who's the actor? Who's the actor that said that? That's
you're gonna change. You're gonna raise the bar.
Okay, Fred Gwynn Jr. Come on, I'll give it to you. There you go. Also known as Herman Munster. Send in the damn Starbucks card, Jack.
Okay.
Cindy got it.
Utes.
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 All right, Cindy, send me your email address.
I'll send it to you. I've got it. So I'll send it to you. Everybody, thanks for being on this thing. If you tuned in late, we'll have this thing up on the BGW CPA YouTube channel later today. And unless things massively change, we're planning on being back here next. Indians. Yeah. No, we will be back here next week, same time, same bat channel. And we'll look forward to seeing y'all. Let's see if there's anything else. There is some banter going back and forth here. Okay.
Enjoy the weather. Apparently it's going to be sunny for an entire week.
Wow. There you go.
It's amazing. I can't recall the last time I've seen weather people on 2 different stations say 0% rain for until next Saturday. I mean, that is putting their jobs on the line, I think more so than
Yeah.
the partly cloudy, mostly sunny, which I think means
Yeah.
the same thing,
That
but I'm
kind
not
of
sure why
covers.
they use one or the other.
Yeah.
It covers. Yeah, that. Well, good for them. We didn't
Okay.
choose that profession. Oh my goodness. All right, guys. You guys have a wonderful rest of the day. See you down on the curb at prices at 12.
All right. Thanks, guys.
Thank you.
Take
Bye.
care.
All right.
Bye.
Bye.